Hello friends, let's try to understand the business models that are used by the FinTech service providers. Business model is essentially about how you make money, how you design your organization, how you provide services or products to the customers, and how do you charge them. Do FinTechs follow the same business models as other businesses, for example, a roadside retailer? Or what is different about FinTech business models? What are those business models and why those models are being deployed by the FinTech companies? Let's understand this in detail. Fundamentally, I can identify about 10 business models in FinTech. Number 1, those which help you take algorithmic decisions and charge you for that. Number 2, those FinTechs which help you in the transaction automation. Number 3, those FinTech services that are digital only and hence save you a lot of time, effort. Number 4, the aggregator services. Number 5, a marketplace. Number 6, API or application programming interface based services. Number 7, usage based services. Number 8, customer as a data, where the FinTech companies make money based on the data analysis of the data that you provide. Number 9, software as a service or platform as a service or banking as a service kind of models. And number 10, blockchain or distributed general ledger based services or products. Let's understand each of these 10 in detail. Number 1, some of the FinTech services providers or product providers, they help you take decisions faster and more accurately by developing algorithms for you. Algorithms are basically computer programs that mimic human behavior. They have predefined set of rules. By understanding what the humans would do, there are self-learning algorithms as well. For example, the algorithms that look at the data, look at the past decisions, how the decisions have worked out, and then accordingly, change their decision pattern. Algorithms have inherent advantages. They are quite fast. What a human might take 10 minutes to decide based on the data, algorithms can define in 1/10 of a second. They are accurate because they are rule-based. They are low cost. It costs more, for example, for a personal financial advisor to understand the client situation and recommend him something. Algorithm, if you feed the data, can do it within seconds. They are rule-based and of course they are available 24/7. It's a machine, so it is available all the time. Examples of algorithmic decision making within finance are, for example, for investing, right? As I mentioned, robo-advisors can look at how you should invest based on your risk appetite, your availability of funds, your current investment portfolio, etc. And then they can recommend where you should invest and how you should invest. In trading area, for example, algorithms are very popular. The brokerages, for example, over 50% of trading volumes on the exchanges is through algorithmic trading and not the brokers, you are human beings. In credit space, for example, algorithms are helping take the credit decisions very fast. In app-based lending, for example, small credit decisions are taken within millionth of a second. In payment space, for example, the algorithms are helping take decisions like whether to approve the payment or not. If there is a suspicion that the transaction is fraudulent, within seconds the payment is declined, or otherwise the payment is okay to go through. So first business model that FinTech companies use is to design algorithmic decision making solutions and charge you for that. The second is there are companies that help you automate your transactions. So automation has its own advantages. It is very efficient. The errors are reduced because, for example, there is just one input from your side, and also you can execute things on time, or you can even they schedule them to happen on time. So this automation is about automating given tasks which are otherwise human beings have to take based on maybe time, based on some kind of event or a trigger. For example, the standing instructions that we give for payments, for example, payment of bills for outstanding on our credit cards. That is one simple example of automation within finance area. Then there are, for example, standing instructions for your home loan EMIs or your education loan EMIs. The payments to be made to vendors, for example, like your maybe mobile services vendor. And then the standing instructions that you can provide through your credit card, for example, for making payment for Facebook advertisement. So transaction automation is one of the areas in FinTech where you can make money by providing these services to the consumers. The third business model in FinTech is by providing digital-only services. So everything is digital, end to end. For example, we know how Paytm came up, right? Paytm was not something where you went to some retail outlet or to some bank or something like that, opened your account or all that, right? You started using it just online, because digital only services or digital banks save on the infrastructure cost. You don't have to maintain expensive property, furniture, where people are going, air conditioning and all that, right? So rent, all these things are out. There is minimum human intervention because everything is automated and online. So online brokerages, for example, E-Trade, etc., Charles Schwab, which came in a big way, online brokerages in US, they leveraged these kind of models. Even in India, we have, for example, Zerodha, which is a very big success story. This is an online brokerage. Digital only banks have come up, and UK has been, I think, UK regulators have taken a lot of lead in that. There are banks there, for example, which don't have any kind of infrastructure. They don't even have a head office or something like that. Of course, they might have one office where some of the key people are sitting, but there is nothing for the customer interface. And then payments wallets, as I told you, is another example of a digital only kind of a service, and these are proliferated in a very big way. The fourth kind of a business model where FinTech companies can make money is by providing the aggregator services, where you aggregate the data and based on that data you provide certain solutions. These aggregator based services use something called APIs, right? Application Programming Interfaces, so that they can get the customer data from various sources. This data is of course consent based. The customer has to give the solution. The data is obtained in a secure way, and of course the cost of transactions is also very low. You can provide one-time access, or you can provide the access for a limited period of time. What these aggregator-based services do is that they provide some value addition once they get the data. So, for example, you get the data on the loans portfolio of the customer and advise them how they can refinance a loan and reduce their cost. The aggregator-based services can look at your insurance portfolio and then they can say, okay, discontinue this insurance policy and go for other insurance policy. They can help in risk management, for example, in managing your credit card debt and so on and so forth. Right? So these are aggregator-based services in FinTech. The fifth model in FinTech where the FinTech companies are making money is by providing marketplace kind of a services. So marketplace is something where different kind of ecosystem players or stakeholders come together. So essentially what you are doing is you are disintermediating, right? You are removing the brokers or the intermediaries, and marketplace is enabling you to directly transact with each other. And they can provide a lot of value add also. For example, they can provide help, facilitate the providing of feedback and ratings also, so that you can understand how the other ecosystem providers are perceived by the others in the market. P2P lending or peer-to-peer lending is one phenomenon where a lot of platforms were set up in India. Of course, there is a strong regulation that RBI has brought in, I think rightfully so, because the credit check authentication was very lax in P2P space. Angel investors networks are being developed, for example, where you can put in small amounts and you can of course go ahead and invest into the startups by as an angel investor. So marketplace is something which will keep evolving. I think the regulators are taking very strict view of that, because in marketplace who will own ultimately the responsibility for, let's say, due diligence or KYC, right? Those questions are something that need to be addressed. Another business model that FinTechs very frequently use is something called usage-driven fees, or what is called a pay-per-drink model or transaction-based kind of a model. So this model converts your fixed cost to variable cost. You don't have to pay anything upfront, but you pay by the number of transactions. So if you are incurring more transactions or undertaking more transactions, you pay more, which is fair. And then also the provider has the skin in the game, right? So if your business volume goes down, they charge you less. If your business volume goes up, they also benefit. Examples are many, in the payment space. For example, if you are making any kind of a payment, for example, you may be charged based on the number of transactions. Same way for credit cards or debit cards. Same way for the brokerages, which charge based on your transactions. In banking, for example, banks charge you, let's say, if you exceed number of cash withdrawals in a month, right? So all these are usage-driven kind of fees where the FinTech players are making money. The seventh model that the FinTech players have is basically customer as a data, right? This model has been popularized by Google, Facebook and other players, where you don't pay for using their services, but they use your data to sell your data to, let's say, advertisers who want to target you, and then they make the money. right? Obviously, there are data privacy issues in this area, and a lot of these players have been accused of malpractices in the past. But of course, those kind of things are improving. Different countries have brought in a lot of regulation. Financial data is extremely valuable, so obviously, somebody like RBI and SEBI, etc., are very much concerned about the financial data of the borrowers, investors in the marketplace. So this data is being taken, a lot of analytics of the behavior of the consumers or the customers is taken, and then that is used for selling some value-added services. For example, Cred, which is the having the credit card data of over 50% of the credit card users in this country, right? They have access to very sensitive data of the customers, right? So, and obviously by making sure that that data is not, sensitive data is not shared with anybody, still they can sort of monetize that data by providing services on top of that, right? So this is just one example of what is happening in fintech as a customer as a data. Even the payments providers in this space, for example, they get access to what are the kind of the patterns of payment, or where does exactly what kind of transaction the customer is incurring, and they can use that data to so for example to show right kind of advertisements to you, just as one of the simple examples. The seventh model in fintech space, which is very popular, is software as a service, platform as a service, or even banking as a service. So these are popular across the entire fintech in various domains. For example, in fraud analytics, cloud-based services which analyze the patterns of the transactions and maybe help you analyze the potential of a fraud. The invoicing of the your services, payments processing, compliance, risk management, payroll and accounting, customer relationship management, right? So these are various kind of subdomains within fintech where software as a service or platform as a service models are being deployed. So there are banking as a service models also which have come up. For example, in core banking, number one, there are pure BaaS or banking as a service providers. So these are white label banking platforms that simply banks can subscribe to. They can set up their system or organization. You can compare it to ERP platforms, right, like SAP, etc., in the business space. So white label banking platforms are something which are quite popular. These are popular with the smaller banks, for example, community banks, etc. And then there are retail banks which have banking as a service kind of model. So apart from their own, they have designed a banking platform for their own use, but they can white label their platform, and they can allow other smaller banks also to use their platform by using something called open banking APIs or application programming interfaces. The eighth area or the subdomain in which the fintech companies are making money is by leveraging blockchain, or what is called a distributed general ledger. Distributed general ledger technology is basically where you store the data virtually. The data is considered tamper-proof because if you change the data, it has to be approved by the over 51% of the users on that space. And then data is available 24/7. It can be accessed because it's not residing on a particular server which can be down. Data integrity, as I mentioned, is ensured, and also there is a data redundancy, right? So if the data in one location is lost because it is virtually stored on the internet, then you can retrieve the data from another location. So these blockchain based solutions are being leveraged to make money by the fintech players. For example, there are cryptocurrency players. Bitcoin is just one of the prominent examples. NFTs, which basically are being used for, let's say, selling and buying of arts. And then smart contracts are also being deployed. For example, the contract for buying and selling of properties. So blockchain is one of the active areas in fintech where there are business models around that, how to make money. Now, understanding these business models will help you understand where you can identify a good career, what kind of technology you should be focusing on, what kind of domain you should be focusing on, and then it will help you get a great career in the fintech area. I hope you found this video useful. If yes, please do like this video, share with your friends who will find this useful, and also subscribe to my channel. Thank you very much. Cheers.